Hello everyone. Today I'm going to help you all how to prepare financial statement of a company as per Schedule 3 of the Companies Act 2013. This video is specifically for BCom, MCom and MBA students for their subject accounting. This video will be a bit lengthy, so requesting everyone to stay till the end so that you can understand the detailed process of preparation of financial statement when there are certain complex adjustments are there. So let's get started. So let me read the trivalence first. So I have the share capital of rupees 3 lakh, general reserve of rupees 1,50,000, buildings 1,50,000, wages 30,000, machinery 1,80,000, furniture 50,000. Purchase and sales. Purchase is on the debit side, sales is on the credit side. Salary 90,000. Debtors and creditors. So debtors and creditors are given. So based on the nature of the account, you need to identify whether debtor should be debited or credited. So debtor, as it is an asset, so it is the debit balance, that is 2,20,000, and creditors is 1,50,000. Then we have bills receivable. Just like receivables and bills payable, just like our debtors, we are segregating it based on the nature of the account. Bills receivable amount is 60,000 and payable amount is 90,000. Directors fees 15,000, and returns. Now a return is, one is your purchase return, another one is your sales return. Now we need to identify that which one is purchase return and which one is your sales return. See, purchase is debit balance, so just opposite of it will be purchase return, and sales is the credit balance, so the opposite of it, that is debit balance, will be your purchase return, sales return, sorry. So in this case, my purchase return is 20,000 and my sales return is 15,000. We have the opening stock, interim dividend. So please keep in mind, this is something unusual account that you can find, interim dividend. We'll see the treatment later on. Just keep in mind what are the different unusual accounts are there. Then you have audit fees, debentures, interest on debentures, investment, goodwill, insurance and taxes, printing and stationery, so cash and bank balances. So the total of both sides is 14 lakh. Apart from this, there are certain adjustments. The first one is your director proposed a total dividend of 25%. So sometimes you will find that instead of total dividend, they can tell that final dividend. Okay, so I'm using the term total dividend, just keep in mind. Then another one is transfer 25% of profit to general reserve. Then number three is your closing stock of rupees 90,000. Depreciate. I am going to depreciate furniture by 5%, building 10%, machinery 20%, and the fifth adjustment is outstanding salary of rupees 90,000. So I'll request you all to pause the video for some time and note down the trivalence first, so that you can refer the trivalence while preparing the statement of profit and loss and balance sheet. Okay, so please pause for some time, note down the trivalence and adjustment for your reference purpose. Okay, so now we are going to see how to prepare the statement of profit and loss. So I have prepared the format of profit and loss. uh, Now I will show you how to prepare the notes and what should the amount under a particular head. So first start with this revenue from operation. Okay, now for revenue from operation, you need to see that what is the sales value, and if there is any other income from the operation of the business. So if you see in this case, only sales value is given and there is no such other other income from the operation of the business. So I will just write down what is the sales amount. Now let me adjust this one a bit. Okay, my sales amount is 5 lakh. Okay, 5 lakh. Now I have the adjustment also, because the sales return is there. So I will subtract the sales return. What is the amount of my sales return? The amount of my sales return is 15,000. Okay, so I'm deducting 15,000 here. So it is coming net sales, it is 4,85,000. So revenue from operation is 4,85,000. So I'm writing down the note number, because I have referred the note number here. Okay, note number 1. So note number 1 is giving me amount of 4,85,000. Okay. Now come to your the second one, that is other income. Now in this question, you in this trivalence and adjustment, you will not find that there is any other income of the business. So here I'm keeping it blank. So my total income is 4,85,000. Okay. Now coming to the expenses part, the first one is your cost of materials consumed. So in this case, there is no information regarding cost of material consumed, so I'll keep it as nil. Okay. Now coming to the purchase of stock in trade. So here the purchase of stock in trade is there, purchase amount is there. So I will write down the note, because here here the purchase, along with the purchase, there is an adjustment of purchase return. So let me make it 1 2. Okay, so the second one is your purchase of stock in trade. Now here, what is the purchase value? The purchase amount is 1,10,000. Now along with the purchase value, I need to adjust the purchase return. So I will deduct the purchase return. I am deducting purchase return to find out what is the net purchase value. So my purchase return is 20,000. So the net value of net purchase is coming 90,000. Okay. So note number 2 is your purchase of stock in trade. So the value is 90,000. So I'm writing down 90,000 here. Next is your changes in inventories of finished goods, work in progress, and stock in trade. So the next note number will be 3. So here is your, I'm just copying this one, this part. Okay. Note number 3 is all about this. So here, what we'll see, we'll try to find out the difference between your opening and closing stock. So let me start the opening stock. What is the value of my opening stock? Opening stock you will find in the trial balance. So the value is 65,000. Then what is the, you can subtract to find out the net difference, the closing stock. The closing stock is 90,000. The difference between opening and closing stock is nothing but within bracket you need to write down 25,000. Okay, so it is coming negative as I'm doing in here. So in copy you will write, within bracket 25,000. Next is your employee benefit expenses. So this is your note number 4. So here I'll see that what is the amount of your employee benefit expenses. Employee benefit expenses. Now, if you see what are the different items that will cover your employee benefit expenses. Simply any benefit that you are giving to your employees. Okay, so here in the travelers there are two items regarding your relating to your employee benefit. One is your wages. Okay, wages, the amount is, there is a specific reason for keeping this column blank. uh, the amount of wages is 30,000, and the next one is your salary. Okay, now you need to keep your eyes on the travelers as well as the adjustment. So if you see the adjustment, there is a adjustment, last adjustment, that is outstanding salary of rupees 10,000. Now when there is any expenses and that one is outstanding, you need to add the outstanding amount, because uh, you are trying to find out what is the total amount of expenses that you have incurred in a particular accounting year. And if you ignore this aspect, if you ignore that, um, the outstanding expenses, you are not fully showing the total expenses in a particular year. So in order to show the total expenses in a particular year, you need to add with this add outstanding expenses with the particular expense. Okay, so in this case the amount of salary is 90,000, and I will add outstanding salary rupees 10,000. So altogether it is coming 1 lakh. Okay. So the total of the employee benefit expenses is 1 lakh 30,000. Fine. So here it is 1 lakh 30,000. Next is your finance cost. Now, what are the different items that will come under your finance cost? Any cost that you are incurring by borrowing funds from some of the sources. For example, you have borrowed fund. Okay, it may be your issue of debentures. You have taken loan from banks. So you have taken money to finance some of the projects. So whenever you are taking money for any purpose of your business, you will give a return to them. That will be called as your finance cost. So here my finance cost is there. To see the finance cost, just see whether there is any such finance cost, because debenture is there. Okay, and debentures, just below the debentures you will find an interest on debenture is there. So okay, so interest on debenture is your finance cost. So interest on debentures is your rupees 15,000. So 15,000 is the total of my finance cost. Okay, so I'm just again I'm writing down. So 15,000 is the total of my finance cost. Next, your amortization, depreciation and amortization. So your second last adjustment is relating to your depreciation. Okay, there is no amortization. Amortization is applicable in case of your intangible assets, and when you are talking about tangible assets, it will call as your depreciation. Okay, so here depreciation we are calculating for three different assets. So I'm just calculating here depreciation, and amortization. So for fast year furniture, on furniture the amount is 50,000, and it is 5% is the depreciation rate, so it is coming 2,500. Okay, next is your buildings. What is the amount of my building? The amount of my building, you need to refer your travelers for this. See, the amount of my building is 1,50,000. Okay, so 1,50,000. What is the rate of depreciation for building is 10%, so it is coming 15,000. Next one, after building we have another assets which should be depreciated is your machinery. So machinery, amount of machinery is 1,80,000 and the rate of depreciation is 20%. So altogether the total amount of depreciation on machinery is 36,000. So total that is coming is your total of 53,500, right? So 53,500 is the total of depreciation. So it is coming 53,500. Now it is your other expenses. Okay, so other expenses, what is the total of your other expenses? Other expenses. Now you need to see the trial balance apart from the all the expenses that you have covered above. Is there any other expenses? So the first one is your director's fees. Okay, so director's fees. Director fees, the amount is 15,000. 15,000. The next one is your audit fees. Audit fees. The total of your audit fees is 10,000. Here, just keep in mind there is an one particular account, interim dividend. Interim dividend will show in the appropriation of profit, not here. Okay, so audit fees is done. Then another one is your insurance and taxes. Taxes. The total is 25,000. 25,000. And then last one is your printing and stationery is rupees 24,000. So my total is coming 74,000. Okay. So 74,000, I'll write here 74,000. Now if you see the total of my expenses, so here I will try to find out what is the total of these expenses. So it is coming, you will just use your calculator to find out the total of this side. So it is coming 3,37,500. Okay. Now after this I will try to find out what is the profit before exceptional and extraordinary items and taxes. So normally at this your level, so the possibility of asking for the exceptional and extraordinary is very rare. So what is the total of my profit? The total of my profit is the difference between 4,85,000, that is total income, minus total of my expenses. Okay, so it is coming 1,47,500 is the profit before exceptional and extraordinary items and taxes. Now coming to your exceptional items, there is no such exceptional items here. Okay, so at your level you won't find any such exceptional items. Okay, so it is, so the profit before extraordinary items is the same as your profit before exceptional and extraordinary item, that is 1,47,500. There is no extraordinary items. I'm not going deep into exceptional and extraordinary items. Okay, so profit before tax is 1,47,500. There is no tax expenses, so my profit after tax is 1,47,500. So this is the statement of my profit and loss. That is the total of, you need to prepare in this way. Okay, so you can't skip any of the steps. So the total of my profit is 1,47,500. Fine. Now, if you see one of the item just previously I mentioned, that it's interim dividend, and another item is there in the adjustment. Another two or more items are there in the adjustment. That is, directors proposed a total dividend of 25%. Number one. Number two is your transfer 25% of profit to general reserves. So altogether there are three different treatments should be there. Three different items are there that we need to show in the appropriation of profit. So I will show you how to prepare the appropriation of profit. Okay, so I'm just going a bit below. Appropriation of profit will the here we'll see the distribution of profit in different forms, whether it may be transferred to general reserve or any sort of dividend. Okay, we'll show here. Now, what is profit? Sorry. Profit after tax amount is your 1,47,500. Okay, so from this amount, appropriation appropriation and the first of appropriation is transfer to general reserve. Transfer to general reserve. Now, before payment of dividend, we are transferring the amount to general reserve. Okay, so what is the amount? That is 1,47,500 into uh, 20 20%. Okay, so that is that will give me 29,500. Okay, the first is transfer to general reserve, that the amount is 29,500. The second one is that interim dividend that you have paid, right? Interim dividend amount is 21,000. And the last one is your the final dividend. So here final dividend we are not going to show. We are going to show what is the difference between final dividend and your interim dividend, and the difference between your final dividend and interim dividend is known as your proposed dividend. Okay, so proposed dividend is I'm just giving you final dividend minus interim dividend. Okay, now here for your calculation I'm showing what is the total of my final dividend. The total of my final dividend is 25. As it is mentioned, director proposed to pay 25 final dividend 25%. That 25% on what amount? That 25% here it is not indicating. Even if it is not indicating, you will calculate on the share capital. Okay, so here the share capital is 3 lakh. 3 lakh into 25%. 25%, that will give you 75,000. From this amount you will deduct the amount of your interim dividend, that is 21,000. Okay, so it is coming 54,000. You will show here 54,000 sum of all the appropriation. Okay, it is coming 1,04,500. Now your profit after tax was 1,47,500 and you have appropriation 1,04,500. What is the difference? The difference between these and these is nothing but the amount of profit that you will show to the balance sheet. Okay, so here I'm writing profit transfer to balance sheet. Okay, so here the profit balance is 43,000. Okay, so this is up to profit and loss account. Now start the balance sheet. Okay, so balance sheet, the first one, balance sheet is consist of two part, that is equity and liabilities and assets. So let's start with this equity part. Now the first one under equity is your shareholders fund, and under shareholders fund the first component is your share capital. So in your profit and loss account we have ended note number 7, so we'll start here note number 8. So note number 8 is your share capital. Okay, now the amount of my share capital as given in the trial balance is 3 lakh. So I will write down 3 lakh here. Okay, so I'm finding out 3 lakh here, just like in the copy that will show. Okay, after this you need to find out the balance, you need to show here in the balance sheet. So 3 lakh is the amount of my share capital. Now starting with the reserve and surplus. So reserve and surplus, reserve and surplus. So the reserve and surplus, current year surplus, current year transfer to general reserve is there, current year profit is there. Do we have the previous year balance or opening balance? We need to see. So only reserve, general reserve balance is there. Okay, so we'll write first general reserve. What is the balance? Balance was 1,50,000. Along with this, what is the current year transfer to general reserve? Okay, that you need to add. Current year transfer. Current year transfer is 29,500. So the total that is there is 1,79,500. Okay, so this is the amount of general reserve. The second one is that we have the profit balance also. Here we have the profit balance also. So what is the profit, current year profit? Now here you will write current year profit, that is after appropriation. Okay, so what is the profit after appropriation is 43,000. So we'll write here 43,000. Now find out the total of this. It is 2,22,500. So here we'll write 2,22,500. Okay, now money received against share warrant. There is no information about your money receipts against share warrant. Then there is no, I'm not going to deep about all these things. There is no share application money pending allotment. There is no case of your allotment money pending. Then you have long-term borrowings. Okay, now for long-term borrowings, we'll see is there any debentures or anything like this. So we, in this case, we have the debentures amount. Okay, so this is your debenture, long-term borrowing. My long-term borrowings is your debentures. What is the amount of your debentures? Is 1,90,000. I am finding the total of this 1,90,000. So here I will write 1,90,000 is the total of my debentures. Is there a deferred tax liability? No, there is no information about deferred tax liability. I'm not going to deep about this. For your better understanding, you can refer the format of your balance sheet. Okay. Now there is no other. If you see the liability side of the balance sheet, sorry, trial balance, you'll find that there is no other borrowings. Long-term provisions, there is no long-term provisions. Is there any short-term provisions? There is no short-term provisions. The next is your trade payables. So it is my element, your trade payable, trade payables. Now in trade payables, we have two different components. One is your bills uh, payable and another one is your creditors. So I'm starting with the creditors. Both creditors and bills payable will be under your trade payable. Okay. Now, sorry, here the amount should be here 1,90,000. Now, what is the amount of my your creditors is 1,50,000. 1,50,000. And the other component is your bills payable. Bills payable. The amount of my bills payable is 9,000. So altogether, the total is coming to 2,40,000. I'll show 2,40,000 here. Okay. Now, Is there any other current liabilities? Okay, so just see once again the travelers. Is there any other current liabilities? There is no current liability, other current liabilities. Only in the adjustment we have what is known as your outstanding salary. Okay, so outstanding salary is your other current liabilities. Outstanding outstanding salary. The amount is 10,000. So I'm finding the total of total of this 10,000, and I will write down here 10,000. Fine. Now, interesting is that short-term provision. See, here the proposed dividend, the amount of proposed dividend is nothing but the provision amount. That is short-term provision. You will show here, right? So that you need to show under your short-term provisions. Here, short-term provisions. Under short-term provisions, will show only proposed dividend. Proposed dividend, the difference is nothing but the final dividend that you have proposed or that you are going to pay minus the interim dividend that you have already paid. So the final dividend that you are proposed to pay is 75,000 and interim dividend is 21,000. So the difference is your 54,000. 54,000 you'll show here. Okay, so and this is 54,000. Total is 54,000. I'll show 54,000 here as adjustment number 13. So note number 13. Now I'll try to find out what is the total of these. I have not done correctly. Let me. So here I have done the mistake. Here it is 54,000. Is coming 10,16,500. Okay, so this is all about your liability side of the balance sheet. Now we'll see the asset side of the balance sheet. Now, the first component is your non-current assets, and under non-current assets, the first one is your fixed assets. Fixed assets consist of two components. One is your tangible asset, another one is your intangible assets. Now, if you see the trivalence, we have three tangible assets. One is a building, machinery, and furniture. Simultaneously, there is depreciation for all the assets are there. So, we'll show in a note. Okay, sorry, this 14. Under tangible assets, the first one is your furniture. Furniture. The amount of furniture is 50,000, and depreciation. You can please be very careful about the amount of depreciation that should match with this, with the amount of depreciation that you have shown here. Okay, so for furniture it is 2,500, for building 15,000, and machinery 36,000. Depreciation at the rate 5%. Okay, so it is 2,500. So it is coming 47,500. Okay, so the furniture part is over. Now the next one is your buildings. Amount of buildings was 1,50,000 less depreciation at the rate 10%. Okay, so it is coming 15,000. So it is coming 1,35,000. So while showing the means like this, when you need to add, you need to subtract, always show in the inner column, and the ultimate balance you show in the outer column. Okay, so one is your land, sorry, furniture, another one is your building, and the last one is your machinery. Machinery amount is machinery 1,80,000 less depreciation at the rate is coming 36,000. So it is coming 1,44,000. Okay, so what is the sum of this? Sum of this will be your 3,26,500. So it is 3,26,500. Okay, okay, fine. Now coming to your intangible assets. So intangible assets like your is there any goodwill, patent, copyright? Is there anything like this that will that will cover as your intangible assets? So here my intangible assets, this goodwill amount is there. So I'll show you goodwill. Okay, so 15 in it is goodwill. It is 60,000. I'm finding the total of this 60,000. I'll show as 60,000 here. Okay, and done. Is there any investment amount, non-current investment amount? You need to see, is there any investment? Okay, so here nothing is mentioned whether it is a short term or long term. So as compared to the amounts, it is 2,50,000, which is quite the amount is quite large. So we'll show as a non-current investment. Okay, non-current investment means which you investment that is that you are keeping, that you can't convert very easily. Okay, so here it is, sorry, 16. It is your non-current investment. Under non-current investment is goodwill. Goodwill amount is 60,000. So you will say, oh sorry, non-current, it is investment. Sorry. Investment amount is 2,50,000. So I'll show 2,50,000 here. 2,50,000. The total of this is 2,50,000. 2,50,000. I'll show 2,50,000 as my non-current investment. Now there is no long-term loans and advances. Now coming to other current assets, other non-current assets. There is no other non-current assets. Coming to current assets, current investment. No information about current investment. Inventories. Okay, inventories is there. So I'll show 17. Note 17 as inventories you will find in the adjustment as your closing stock, right? So closing stock amount is 90,000. So I'll show here is 90,000. The total is 90,000. Now inventories is your 90,000. There. Now trade receivables, just like your trade payables, receivables also consist of two components. What are these two components? We'll see now. Receivables. Okay. Under receivables, there are two components. One is your debtors. Debtors. Your debtors amount is 2,20,000. I can show in the outer columns. There is no issue. Okay. As well as you have bills receivable. Bills receivable. The amount of bills receivable is 60,000. The total debt is there is 2,80,000. So 2,80,000 is the total of my trade receivables. Okay, so 2,80,000. I'll show here 2,80,000. Now the last one is your next one is your cash and cash equivalents. So here you have the last component of the travel is cash and bank balance. So here I this series cash and cash equivalents. It is cash and bank balances. Okay, cash and cash bank balances is only 10,000. 10,000. You will show total 10,000. Total 10,000. I'll show 10,000 here. Okay. Okay, fine. There is no short-term loans and advances. There is no other currency. So, uh, uh, if there is any prepaid or accrued income, that you will show under your other currencies. Now, let us see what is the total of your SSIs. As it is starting from here. So see the amount of liabilities, total amount of liabilities and the total amount of your assets. Both sides are matching, and you will see that we have covered all the adjustment also. We have covered all the items from the travelers, as well as we have covered all the adjustments item, like your declares directors proposed payment of final dividend, transfer of profit to general reserve, closing stock, depreciation, and outstanding, salaries. So here, as both sides of the balance sheets, that is assets plus liabilities equal to assets is equal to liabilities plus equity. That means the preparation of our final account is done. So this is the way or process that you need to follow while preparing the financial statement.